Testing, testing, testing. Testing, testing, testing. Got it. All right, let's get to it. Good morning, good morning, good morning. How are you guys doing? I'm gonna do my top-down analysis of what I'm looking at in price in about 2 minutes. All right, so I'm gonna do a quick top-down analysis. So I'm gonna first look to see if we can take out this high above here, but I'm gonna start with the monthly time frame and work my way down. Okay, monthly time frame, we just been clearly bearish. Weekly time frame, we have this. So weekly time frame here is kind of interesting, right? Ever since the weekly open, we have come down about almost 1,000 points. So a 5% move down on this weekly candle. But what I'm looking at for this weekly candle is to see if we want to hold right here. Because this is the thing, right? If this weekly candle closes around previous week low, so if we want to consolidate around this range, then what we're going to have for next week is this. We're going to have this weekly gap like this. So if this week we close around previous week low or around this range, then for next week, we're going to have this gap to play with. And then we can look to continue going lower, potentially taking out this low. So that's what I'm looking at on the weekly, which is why I'm not going to expect more 1,000 point, 4% move downs on the daily chart. But if we do want to stay within this range on the weekly and create this weekly imbalance for us to then go lower or maybe close above and continue going higher, then that's what I'm going to be waiting for. So that's what I'm looking at on the weekly. Good morning, good morning. How you guys doing? I'm going to go to the daily time frame now. So daily time frame, this is what I'm looking at right now. So we have this daily imbalance that we are currently into. So we already rebalanced this daily SIBI, gave it that complete fill. We also have this daily imbalance to the left side. So this is what I would consider trapped order flow when you have this daily imbalance below and daily imbalance above. So right now, the closure of this daily candle is very important, because if we do want to offer fair value from this daily gap, then what we will want to look for is practically the hourly gap that's inside of it. So if I go to my hourly time frame, the hourly chart, we have this hourly gap right here at premium of the range that we are inside. So I want to be paying attention to the closure of this hourly candle. We also have SMTs at the highs with ES. So ES wasn't able to take out this high at 11 a.m., but NQ was able to. So there is SMT at the highs with ES. So this is the daily rally gap, and this is the hourly SIBI inside the daily SIBI. So this is more of your alignment refined PDA. So I'm going to mark out the consequent encroachment, the CE of this PDA. So this is the one I'm paying attention to. I'm going to go to the 4-hour chart and see what there is. So on the 4-hour time frame, we have this 4-hour imbalance that we haven't yet closed above it. You can see how price traded into it, but we never really closed in the midpoint of this PDA, nor have we closed above it. We've just been respecting it with only the wicks. And right now, I'm looking to see the closure of the hourly and this 4-hour candle. So we already tapped premium of the range. We have already taken previous daily high. So for me to be bearish right now, I'm going to want to see at least a 5-minute change in the state of delivery. So what I was looking for here on the 5-minute was basically for this high to get taken. Why this high? Because this is the high that stung into the hourly imbalance. So I'm looking to see if we can get that short-term liquidity raid, come back down, displacing down, closing below a up-close candle or a series of up-close candles if we take out this high, and then looking to retest it and then continue going lower. So this is the game plan I have marked out right now, and I'm going to see if we can do this. If we do somehow close back down below this opening of 830 or this one right here, then the probability of us going for that 830 high is now slimmed. So this is what I'm looking at right now. So if we do get this scenario, then I'll be bearish for previous daily low. And previous daily low is not that far too. We are just about around like 500 points away from previous daily low. So almost a 2% move down. So in 13 minutes, we're going to have this hourly imbalance that we are currently making. So also going to be paying attention to this, because once the candle opens around this range like this, we're going to see if we can get an open, high, low, close, and invalidate this hourly BISI if we're continuing to be bearish. If we do somehow want to open, then come down, respecting it, coming back up, taking out the high and closing above like this, then I'm going to stay hands off. But as of now, that is the only thing I'm looking at in a bearish case scenario. So two scenarios. I'm gonna wait for this first one to pan out. If it does pan out, then I'm gonna be completely 100% bearish. Let's see what's going on here. So we had the 9:30 opening. Is there SMT at the highs? So NQ was able to take out this high at 9:05. ES wasn't, so there is some SMT here. It's the exact high that we took out on NQ. I'm gonna delete this one right here. So we did not take out the A30 high, but we are currently respecting the hourly imbalance because we're not above the midpoint of this imbalance of the hourly time frame. I'm also going to mark out the 6 a.m. open. So in 9 minutes, we're going to have a 4-hour imbalance created. So this is our 4-hour time frame. We're going to have this imbalance being made right here. So 10 a.m. is going to open somewhere around this range. If it does open above the midpoint of this 4-hour imbalance, then that's going to be something to look at too. But we do have this 4-hour imbalance below. $15-minute time frame. We have stabbed into this 15-minute BISI. So I'm going to mark this out. Make it orange. And then I'm just going to mark this out as 15 BISI right here. All right, 950 to 1010 macro. some volatility in this 1 minute candle. We're about to go for this swing low inside this 15. Some SMT at this high with ES. So ES is trading back below the 4-hour opening of its 4-hour candle. We're still looking at this daily SIBI on our daily chart for NQ as well. But as far as the 4-hour time frame, ES is pretty much below the opening now. So this is the ES chart on top left. So this is ES right here. It's below the 6 a.m. opening. So we're about to go for this swing low that has stabbed into this 15 PDA. 950 to 1010 macro. We have taken out the old low that stabbed into it. So this 1 minute candle with this volatility didn't take out this high, but ES did. So there is a 1 minute SMT at this high up here. And then we pushed down, taking out this low. So I'm gonna delete this actually. We're gonna see if there's any SMTs at these lows, because ES is already below the 6 a.m. open. So we didn't get a short-term liquidity rate. We didn't take out the 830 high, but we are displacing through into this 15-minute gap. So what I'm looking at right now is to see if we get a closure below this green candle right here. Because these two up close candles are the ones that stabbed into the hourly gap. So if we do get a closure below this one, this would be your change in the state of delivery. We are about 3 minutes into the 5-minute candle closes. So these two up close candles are the ones that traded and rebalanced the hourly SIBI. So if we get a candle closure below this one, this last one, that would be your change in the state of delivery. So it's likely that this 15-minute gap will fail. Because remember, higher time frame, we have our daily SIBI above us. So this is where we're basically reacting away from this daily PDA. So what I'm looking at on the 5-minute is to see if our hourly fair value gap wants to offer fair value to the lows. Realistically, I was looking for the A30 high sweep, then the change in the state delivery to then go lower, but we didn't really get it. Instead, we had those SMTs with the S highs. So yeah, ES is very bearish right now. So if I go to my 15-minute time frame on NQ and I pull up the ES chart, ES is pretty much taken out. Yeah, ES is trading into this 15-minute imbalance right here. So both ES and MNQ or NQ are both inside a 15-minute imbalance. This 15-minute imbalance is also inside our discount range of our dealing range on our 15. So around discount. So I want to see how ES responds to this 15. So we're not getting that 5-minute change in the state delivery yet, but we are weakening back above. So this is our 15-minute fair value gap. This is the swing low that we put in. We have taken out that swing low. So this is your short-term liquidity rate. If price wants to continue going higher, then we're going to expect a 1-minute closure above the series of these down close candles. So this last one. So if we're likely to push higher, then this is what you expect. Closure above, retest, and then go for the A30 highs. If we don't get that closure above and get that 5-minute change in state delivery instead, then we're going to continue grinding down. So new 15 candle has opened inside the 15-minute BISI. So slightly inside of it, but a little bit outside too. So far, we're respecting the hourly imbalance. So here is 10 a.m. So this is your 10 a.m. open. So 4-hour time frame. We have this 4-hour imbalance below. What I'm going to do is I'm going to delete this 4-hour imbalance. Let's mark out the midpoint of it. So we open slightly below the midpoint of this 4-hour imbalance. But I'm going to mark out this one below us as well. ES. Hourly time frame. 4-hour. Make this visible on all time frames. And then go back to our hourly time frame. Yep, there we go. Okay. So inside this 4-hour imbalance, we also have this hourly imbalance. We are also way above the midnight opening price. So when a new 4-hour candle opens, you kind of want to ask yourself this question. What is this candle more higher probability to be, an open low high close or an open high low close? If we're bearish from our daily SIBI, we're going to expect our 4-hour candle to be an open high and then a low and then a close, right? So what is the more probability of this 10 a.m.? Where is it likely to create the wick? That's the question you should be asking yourself every time a new 4-hour candle opens, or any candle in general, daily, weekly, monthly. So this hourly SIBI, we have open below it. Only the wicks have done the damage for this hourly SIBI. So you can see how the wicks have traded and pierced through it. But then we came back into it and closed below the midpoint of this gap. So this is good. This is what we want to see if we're bearish. We want to see this being respected. Hourly time frame. 10 a.m. open. We have already taken out the hourly low. So this is our 15-minute fair value gap right here. Five minutes. So on our 5-minute time frame, we still have not gotten this 5-minute change in the state delivery. So this hourly gap isn't 100% shown to offer fair value just yet. Not until we get that 5-minute change in the state delivery. So we have swept this low once more. So this is your short-term liquidity rate. This is your 15-minute imbalance. Where's the 10 a.m.? 10 a.m. is not here yet. Gotta mark it like this, actually. Yeah. All right. So right now we're trading above the 10 a.m. open. We do have some kind of SMTs at the lows as well with on the 15 with ES. So ES was able to take out the the 8 a.m. lows, but NQ wasn't. So this is SMT down here. So this is why it's very important to wait for that proper change in the state delivery. The change in state delivery that I was waiting for from our hourly SIBI was this one right here. But notice how only the wicks really traded through and never really closed below it. So this is the 1 minute. We're going to see if we look for some reactions out of this 15-minute gap. If I were to trade this, let's say that my buys coming into the day was bullish and my draw liquidity was higher. then I would have looked for an entry at the retest of this OB, but never really got the retest. Instead, we just kept grinding higher on here. I'm gonna draw out the premium discount of this range like this. So we're around OTE of this range here at premium. ES is still down below, hasn't catched up yet to NQ. So on our 15-minute time frame, if we look at this 15-minute for value gap down here, you can see how the bodies are closing above the gap. So we're not closing inside of it, not in the midpoint, not below it, but we're closing above it. So only the wicks are really doing the damage from this 15. But like I said, we're coming from a daily imbalance. We're coming away from a hourly imbalance as well. So if I'm bearish, I want to see the change in the state delivery from this last up close candle at 8:25 a.m. If we do somehow take out the 8:30 high and then have another 5-minute change in the state delivery, that would also be another opportunity. But I'm still bearish from the daily SIBI, but I'm tape reading how we're moving away from this 15. So if I'm bullish for this 15 off of fair value to the 8:30 highs, then I want to see at least us closing above this wick. Because if this 15 does offer fair value, then these 8:30 highs will be taken. But if we do just come out of nowhere, retrace to premium, close below this 1 minute fair value gap, and then retest it, and then come lower, that can be also a potential scenario. So we have SMTs at the highs with ES. I'm looking to see this wick though. This wick at around 952. So we're retracing down into this 1 minute gap. Gonna mark this out. We have closed below the 1 minute BISI. This 1 minute candle opened, retested the low of this 1 minute inversion. All right, so we had a new 15-minute candle open inside the 15-minute gap. So hourly SIBI is having a more stronger reaction here. So I'm going to scale down to the 5-minute. So like I said, if we do have that closure below this candle, the 8:25 a.m. up close candle, I'm going to be 100% bearish. Because this is the candle, the last up close candle from the swing high that stabbed into the hourly imbalance. So pretty much all of this price action here is something that I wouldn't engage with. So if I were to trade this, I wouldn't engage with any of this price action. Not until we have a candle closure above this right here. So all of this price action, I would avoid. My confirmation level would be this last up close candle. So closure below it, and I'm expecting us to come down, at least into this 4-hour imbalance that we have below. That would be like a 70-point move down. So just by me waiting for the CISD, I could save myself from this PA. So I don't need to trade this. All I have to do is just wait. So I'm gonna mark out the 10 a.m. here because it doesn't show on my chart for some reason. All right. So what we did as of now was all right, so we retraced down to our 15-minute gap, right? So this range here was our 15-minute gap. So we came down, rebalanced our 15-minute gap. And what we did practically was we had a retracement up into premium. This retracement up into premium aligned with this 15-minute OB. So if we go to our 15-minute time frame, we have this 15-minute order block. So scaling down to the 1 minute, this was a retracement up into premium. And inside this 15-minute OB, we had a short-term liquidity raid. So this was our short-term liquidity raid here, because this was basically the swing high that stabbed into this PDA. Once we took that swing high, this was your short-term liquidity raid. And then we had a change in the state of delivery right here. I'm also going to make this visible only on this time frame. Okay. So we had this. Actually, I'm going to make it visible on only the minute. Yeah. Okay. So yeah. So short-term liquidity rate, 15-minute OB, retracement into premium. Then we had this CISD, this 1-minute CISD. And I'm pretty sure we had some SMT at the highs here. We took out this low at 954. 954. We took out the same low. But we took out this high too. Like this. We did not take it on ES. Okay. So there was some SMT at the highs here. But short-term liquidity rate, SMT, change in state delivery. And then we basically traded into this 1-minute imbalance right here. And now we're trading and retesting the 10 a.m. open. On the 5-minute, we still haven't gotten a change in state delivery yet. Only the wicks are really piercing through it. But we are trading into this 5-minute gap here as well. So I'm going to mark this out too. N5, SIBI. And then scale down to the 1-minute. All right, so 15-minute OB. We have this 5-minute SIBI that we're trading into. What I'm going to look at is this 1-minute fair value gap down here. This could be a potential inversion. So let's see. Morning. How are you guys doing? So I'm looking to see right now if the 10 a.m. has already put in the wick. So this candle right here. So this is the 4-hour candle. What I'm looking at to see is if this wick here is the manipulation for this current 4-hour candle. So manipulation at this 15-minute OB. So if we are to be bearish, then I'm going to expect us to close below this, retest it, and then continue going lower. So this could be the manipulation of this 4-hour candle. So that's what I'm currently looking at. Because we do have this 4-hour SIBI right below us. So we're closing, displacing through this 1-minute BISI. I'm also going to draw my standard deviations. So this swing high and this swing low. So what we have here is -3, -3.5, -4 aligning with this 4-hour imbalance below us. So we practically traded into -1.5. So this is your silver bullet zone area. Retrace into a 5-minute gap. Had a 1-minute inversion. So now we're looking to see if price wants to deliver down to our 4-hour imbalance below. So this retracement up was just to go into premium and then potentially pushing lower now. So we're retesting that 1-minute inversion now. 15-minute time frame. 5-minute time frame. So 5-minute time frame, we haven't gotten that change in the state delivery yet, but we're gonna see if we get it. But right now, this is the framework I'm looking at on the lower time frame. So retracement into the 15-minute OB. We had that lower time frame confirmation at the 15-minute OB. We retrace into this 5-minute gap. So this 5-minute gap right here. We then inverse that 5-minute gap with this displacement at 1023. Now we're retesting that 1-minute gap. So if I'm bearish, I'm going to see us respect this and continue going lower. -2 also aligns with this low that we put in, but I'm going to see if we get that 5-minute change in the state delivery. So this up close candle, this last one. Because like I said, remember, if the 4-hour candle is a open high low close, then this wick should already be put in for this specific 4-hour 10 a.m. candle. We are at the 4-hour opening. Yep, right around the 10 a.m. So we have closed above this 1-minute inversion. We're retesting the 10 a.m. open now. So this is our 10 a.m. right here. So this is the level that we're retesting it. I don't want to see a candle closure above the 10 a.m. We're also retesting the 5-minute gap now. So here, we have not gotten a 5-minute change in the state delivery yet. So these two up close candles that stung into the hourly BISI or SIBI, so this one right here, to the left side of us, we have not gotten a candle closure below it. So there is no real confirmation of us being bearish yet, not until we get a candle closure below. But the framework around the 1 minute on here, this is what I'm looking at. I'm looking at a candle closure below and seeing lower prices to our 4-hour imbalance. So we're going to see if we can retest this 1 minute inversion and then look to potentially look for this 4-hour imbalance below. So this 4-hour gap down here. So we had 1 minute SMTs at these lows, but we also have them now at these highs as well. Look at ES daily, giving it away. NQ playing with this consolidation on a CPI day is wild. I mean, I'm still bearish, but the reason why we're just consolidating here in this range is simply because we haven't gotten a 5 minute change in the still delivery yet. Because remember, we're trading away from the daily candle. I mean, the daily SIBI, right? What's the time frame alignment with the daily? The hourly. What do we have on hourly? We have this hourly gap right here. This is the hourly gap that we're reacting away from. Now, what's the time frame alignment with the hourly? The 5 minute. So what I'm looking at is to see whether we close below this green candle. If we do close below it, then I'm going to be 100% bearish. Anything in between this is something I stay away from or sit on my hands. So we're going to go back to the 1 minute. The 1 minute, I'm just looking at what's going on the lower time frame. So what I'm looking at to see is if this 4-hour candle's wick is the manipulation, so we can expect that distribution back down. Also, I'll be right back. I'm gonna go to the bathroom. Getting more Oops. All right. All right, so let's see what we're doing now. All right. So basically, this is a pretty clean delivery. It wasn't clean, I mean, when we retrace back to premium again, but you can see this 1 minute inversion, how we traded above it, came back down, and then we practically retested that 1 minute inversion 2 times. So on the last retest, delivered down to minus 2.5 standard deviation. We still have this 4-hour imbalance below us, however. So like I said, I'm looking to see if our 15, so this 15-minute OB is the cause of this wick for the 4-hour candle. So if the 4-hour candle has already printed the wick and our PDA was the 15-minute OB, then what I'm going to expect is lower prices from here. If I'm bearish, I'm going to expect us to violate this 4-hour BISI. So not Civi, but BISI right here. There we go. Five-minute. Let me look at the 5-minute real quick. All right, so 5-minute candle, we have closed below it with displacement through. I'm gonna take out all this. So this is the green candle I was waiting for. We closed it below it with displacement. So this is good. I like to see this. So if the 10 a.m. has already printed the wick at the 15-minute OB, then this is a good sign. I mean, this is perfect delivery. I didn't like the delivery here, like around this range, but the delivery of us printing the wick at the 15-minute OB and then seeing us continue going lower, this is pretty clean. All right, so we're close to rebalancing this 4-hour BISI now. If you guys look closely at our hourly time frame, you guys can see how the 10 a.m. practically opened, retested the 15-minute order block, but we also retested the hourly consequent enroachment. So the midpoint of this hourly imbalance, you guys can see how we opened, retested it, reacted away from it, and below the opening of the 10 a.m. now. So this is pretty clean. So we're about a few points away from rebalancing our 4-hour. So about like 24 points. We didn't take out the 830 high, which is what I was looking for, but this is still a valid delivery here. All right, so we have successfully rebalanced our 4-hour BISI. So from here, we're going to see if we are going to see some bullish reactions away from this PDA, or if we're going to violate this PDA and continue going lower. Now what I'm going to do is I'm going to draw my deviations out from the high of the wick to practically the opening of the 10 a.m. I'm going to put them right here. So we have midnight opening price lining up with it. All right, so on our hourly time frame, ES is pretty heavy right now. So ES was able to take out these lows at around 3 a.m. NQ wasn't, so there is some kind of bullish SMT at these lows. So I'm going to mark this out. If I'm bearish for the daily candle or the daily to offer fair value to the lows, I don't really want to see these SMTs. So we're going to see if we can get a candle closure below midnight. Because this is our midnight opening price. So what I want to see on the hourly candle is us continuing driving lower. So if we do close below the midnight open, we could look for us to retrace into the midnight opening and then continue going lower, violating these SMTs at these lows. Because if these SMTs at these lows and this 4-hour gap holds, then we're probably just going to disrespect this whole bearish case scenario and just go for the 830 highs above. $15-minute time frame, we are inside this 15-minute gap as well. So this is our 4-hour imbalance. We have this 15-minute imbalance here too. So I'm actually going to draw this out purple and then mark this out. 15 BISI. Let's scale down to the 1 minute. So this up here was the framework for us going short, or not us going short, but like the delivery on why we were anticipating lower prices. So like I said, from here we retrace into a 15-minute BISI. We then retraced into premium, had SMTs at the highs. We were also inside this 15-minute order block above the 10 a.m. open. So if you're anticipating a wick to be printed at a specific candle, you're going to want to see at least a higher time frame PDA. In this case scenario, the higher time frame PDA was this 15-minute order block. Retrace the premium, put in the swing high, rated that swing high. That's your short-term liquidity rate. Close below with displacement at 10:11 a.m. So we had that 1 minute CISD. And after that, we retested a 5-minute SIBI, had a 1-minute inversion. This retracement, however, at around 10:23 to 10:28, that was really unnecessary retracement. Didn't really expect this retracement at all, but retested the 5-minute once more. And then we retested that inversion right here at around 10:31. And then we delivered down to our 4-hour imbalance. So if we were to trade the retest of our inversion with the stop at the high and our target at the low, this would have been a nice little 2-hour trade like this, just from this framework of us anticipating lower prices. So now that I have covered this portion, I'm actually going to delete it now. And actually, I'm only going to delete this area. And I'm going to delete this as well. Delete this as well, and all this stuff. All right. So we are inside the 4-hour imbalance. We have a 15-minute balance right at it, right underneath. We have these S&Ts at these lows. I'm not anticipating us to reverse yet, but there can be some kind of reversal signature in this area. I mean, I just don't like the way how ES has traded all the way lower, but NQ is still up here. So if we do want to respect this 15-minute imbalance, I'm going to want to see that low getting taken, change its state delivery, and then continue pushing higher. So let's see what we do here. Earlier, I took the 2-hour trade you just showed from the previous leg, thought and price tagged my stop loss. Why do you believe it happened? Why? I mean, where did you place your stop loss? Because if your stop loss was too tight, then especially when we were inside this range, At the high of the leg and look the trade from the first inversion took. The high of the leg. Oh, this leg right here. I see it now. So your trade was like this right here. Like this. So the 5-minute gap, the 1-minute inversion, stop at the high. You practically got wicked out by 1 point. And then your take profit was down here. To our trade, boy, you got wicked out. Yeah, this is the leg that I was talking about, how unnecessary it really was. Because normally what you expect out the 1-minute inversion is a delivery down to the lows. But this was a unnecessary retracement up, sweeping the high once more. So yeah, you practically literally just got wicked out. You didn't do anything wrong. I mean, the framework was there, but you just weren't lucky for today. Because that retracement up was really unnecessary, but we were kind of ranging still. So I'm pretty sure a lot of people got stopped out on that too, not just you. But by 1 point is really insane too. But yeah, you didn't do anything wrong. I mean, did you manage your risk though on the trade? All right. So I'm gonna delete this again. I just needed to get it back for a screenshot. So here we have this 4-hour imbalance down here. We also have a 15-minute imbalance down here as well. 5-minute, we're retracing into this 5-minute gap above us. We also have these deviations pointed out. So this high and this low. So I'm gonna draw our premium discount from this range like this. All right. Premium discount. I'm pretty sure there's SMTs at these lows. Just by the way, where we're tracing. Yep, these lows right here. So ES took out this low at around 1041. NQ wasn't able to take out these lows. So there is bullish SMTs at these lows. This is the 1-minute change in state delivery right here. We have the 1050, 1110 macro. If this 15-minute does want to hold, then you want to see a short-term liquidity raid. But we didn't really have that short-term liquidity raid because this is the low that stung into the 15. But let's see. Because we didn't tap into this 5-minute. What about ES? ES hasn't tapped into that 5-minute too. Thank you. And do you believe it's important to put the equilibrium on the charts? No, I got stopped out on my whole position. I mean, the trade that you took, I mean, if it was this one up here, so let me delete everything here. Because practically the trade that I imagined that you took was this inversion off the 5-minute gap. So if you took it off the retest and your stop loss was at this swing high and your take profit was down at the 4-hour imbalance like this, I mean, if you had your equilibrium, let's say you had your premium discount range marked out like this, your stop loss was in a very good, and I mean it, your stop loss was in a very good position. I mean, this stop loss is 45 points. It's a very, I mean, it's not a very tight stop loss. It's more of like a wide but good protected stop loss. But you still got wicked out on it. And honestly, you didn't do anything wrong. I mean, the stop loss is pretty good. Luck just wasn't on your side today. That's all. So this is a very good stop loss. I mean, I like it, but all that happened today was just that you got wicked out, bro. So as long as you manage your risk and you control yourself, you should be fine. Just know that the setup you took was a very good setup. And it's going to appear probably tomorrow, probably today, probably later, probably next week. Just know it's going to appear again. So setup was really good, but luck wasn't on your side. That's all. Do you think we're going to see higher prices or lower? So right now, I'm looking to see if we get lower prices from our, let me delete this. So this is our daily imbalance. I'm looking to see basically if this daily imbalance wants to offer fair value to this low. So previous daily low is my current draw on liquidity. But we are also inside of this 4-hour gap right here. So I want to see us violate this 4-hour gap and just continue going lower. So I'm bearish at the moment, but I'm just marking out these this 4-hour gap and this 15 just to see how we react away from it. But the alignment for our daily time frame is the 5-minute. So daily, hourly SIBI, and then we have the 5-minute time frame. If I were to trade this, my entry would have to be all the way down here or at this 5-minute gap. But we never really retested the change in the state delivery. So I was looking more for something like this, like a closure below it, and then retesting it, getting my entry, and then targeting the lows. But we never got that. We never got that retest. So far, I haven't gotten an entry yet on this short. I was anticipating this delivery, right? But my short opportunity didn't present itself. Yes, I probably could have gotten in at the closure of this CISD, so right here. but my stop loss would have to be like 109 points just to target this low. No, I don't really like that stop loss, but this is pretty good though. I mean, I like it. I like the delivery. I just didn't like this chop we had before the 10 a.m. or before this 5-minute CISD. Like you knew it would be the high, or let me read this again actually. What's your best advice on building self-control? So my best advice on building self-control would be, I mean, there before when I had a lot of issues on self-control, like when I would go on tilt, when I would revenge trade, or like take a lot of trades, it just gets to a point where you do it so many times that you eventually get tired of doing it. So like let's say you've been trading for like 2 years and you're still blowing accounts. One day you're just gonna look at yourself in the mirror and you're gonna come to a realization that you're wasting your time. And if you don't change now, you never will change. As painful as it sounds, if you don't change the way you manage your risk and you continue on blowing accounts due to your improper risk management, you're never gonna make it in this industry. And that's the harsh reality that you have to accept. So it's not a matter of how can I how can I how can I build self-control? It's more of like, it's more of like, it just comes to a realization, you know? So my best advice would be, for example, if you blow an account, don't trade for the next week and just view price. View the way it moves, view the setups that you will take, and just look at the charts without taking any trades. That's what I would do. Or open up a personal account and start trading the personal account. Because trading a personal account will teach you more than a funded account will. Because with a personal account, you're trading your own capital. You're not trading a sim, you're trading real money. So if you lack self-discipline, open up a personal account and put the money that you worked hard for into the account and start trading it. Because from there, you're going to start building discipline. Because if you start, like, let's say you put $500, right? And let's say you full ported because you lack that self-discipline. You lost about 40 hours or if not 20 hours of your life working for that money, and you see it gone in like 2 seconds. I think that's gonna have you thinking for a little while, right? So open up a personal account, start trading it. It's gonna help you develop better habits than any any funded eval or paper account will. A lot of people say start paper trading. I'm not a fan of that. The best thing you can do is open up a personal account and start trading it immediately. Because a personal account is going to teach you more than any eval, funded, or paper is going to teach you, bro. Don't paper trade. If you're paper trading, I mean, paper trading is good to get like a feel of it, of like trading when you're new. But if you're 3 months in, start a personal account. Stop paper trading. It's not going to teach you anything. That's the trap that I got in. And I don't want anybody to be in that trap. Because paper trading never taught me anything. Paper trading is only to get a feel what trading is like. Once you're 3 months in, you gotta get your hands wet. So could you go over how that current 4-hour high will be placed? So could you go over how that current 4-hour high would be placed and we would be going lower? Like you knew it would be a high. Okay, so this is the 4-hour candle, right? So when a candle opens, so I'm gonna go here actually. I'm gonna draw this as a black box like this. So let's say we have the 10 a.m. right here. This is the 10 o'clock candle, like this. All right. So when a new 4-hour candle opens, and I'm actually gonna take this out too, so it's easier to see. All right. So when a new 4-hour candle opens, practically you're gonna anticipate a wick to be formed, right? Now, the question is the new 4-hour a open, high, low, close, or a open, low, high, close? I'm going to make this smaller too. So this is the question that you want to ask yourself every time a new candle opens. If you have your drawn liquidity and you have your higher time frame analysis that you have done, and you think that this candle is going to be a bearish candle, then what it's going to do is the candle is going to open. It's going to manipulate, right? So let's say this is the opening of the 10 a.m. Right here, this candle is going to be green because it's manipulating to the upside. So in the current moment, it's green, right? But in your mind, this candle is only a wick. So right now, the candle is green. But in your mind, this is going to be a wick. Because we're going to expect lower prices. So when a 10 a.m. or any 4-hour candle opens, what you want to look for is a higher time frame PDRA. So what I mean by this is a 4-hour, a 1-hour, or a 15-minute. So you're going to want to look for a 4-hour, a 1-hour, or 15-minute PDRA. 4-hour manipulation. Look for a 4-hour, 1-hour. So like this. So this is what you want to look for. You want to look for either a 4-hour, a 1-hour, or a 15-minute PD array, or our 4-hour candle to manipulate at. So for example, when we open from the 10 a.m., what I was looking for was a 15-minute PD array because we already tapped into this hourly imbalance. So I wanted to look for a fresh new PD array that we haven't tapped into. And I have this indicator as well. So this fair value gap indicator, this order block indicator to where I can like look for new PD arrays in case I miss them. But you don't really need them if you already know what a PD array or like how to draw them out. But here we had this OB. So this green candle is our order block right here. Simply, I extended it out like this. So this is our 15-minute order block. So from this 15-minute order block, where's the 10 a.m. open? The 10 a.m. open is right here. Now, what PD array did the 10 a.m. manipulate at? Well, the closest PD array is this 15-minute OB, right? Now, what's the time frame alignment for the 15-minute time frame? The alignment for the 15-minute time frame is the 1 minute. So what do? We scale down to the 1 minute. From the 1 minute, and I'm actually going to remove this hourly imbalance because I only want to focus on the order block. All right. So from this 15-minute right here and the 10 a.m. open, so I'm going to take this out as well. So remember, this is our 10 a.m. open right here, right? Pay attention, pay attention. This is our higher time frame PD array. Right here, this is our wick. So where do we expect manipulation for our candle to occur? At a higher time frame PD array, right? Where did the 10 a.m. manipulate at? This 15-minute order block, right? Now, what do we look for to confirm the wick has been printed inside a higher time frame PD array? We look for a short-term liquidity rate. So we opened, retraced into the 15-minute order block. We put in this swing high inside of it. Now, what we want to look for is that swing high being taken once more to confirm our short-term liquidity rate. Right here, you can see that we took out that high once more, right? So that's our short-term liquidity rate. What we want to look for to confirm the wick has been printed is this. We want to look for a higher time frame, PDA. We want to look for time frame alignment. We want to look for a short-term liquidity rate. We want to look for SMT. And then we want to look for a change in the state of delivery. Very simple. This is a very simple checklist that I look for every single day. So we have a higher time frame PD array, right? So we can basically cross this off. Or actually, we'll just do the checklist. Emojis. All right, right here. So we have our higher time frame PD array, right? We have our aligned time frame. So what is the time frame alignment for the 15? It's the 1 minute. Now, we have our short-term liquidity rate right up here, right? So this is the short-term liquidity rate. And then we want to look for SMT. Is there SMT at this high up here? Let's see. Well, at 10:10 a.m., NQ did not take out the 10:953 high of this 1 minute candle. Let's see. So 953 right here, what did we take? So NQ took it. So there is SMT at these highs right here. So if we go back to our checklist, we had SMTs at the highs. So if I can grab this and then place it right here. Okay, what's the next thing that we want to look for? A change in the state of delivery. So where is our change in state of delivery? Right here. These two up close candles are the ones that rated the swing high. So this would be your change in state of delivery. So we have everything checked out. All our checklist is complete for our trade, pretty much. So where would our entry be? I mean, if we got in at the close right here, and we have this fair value gap, we basically have this VPR on the left side of the curve right here. So our entry could either be at the VPR like this, or just this fair value gap up here, like this. So entry right here at this FEG, stop loss. This is where a lot of people get their stop loss wrong, right? Your stop loss has to be the swing high, right? It doesn't have to be, but if you want your stop loss to not be swept or like taken out by 1 point, it has to be above the SMT. So if this is a wide stop loss for you, size down. That's what I do. So if my stop loss is way too wide, what I do is basically size down. And if the position is going in my favor, you can add into the position. So deviations, I'll mark them out from this high to this low, like this. Or you can mark them out from the high to the opening of the candle. Because remember, we're trading off the 4-hour candle, right? So if you're anticipating the expansion of the 4-hour candle, you can lock in your profits at the swing low here. And then you can leave runners to this -4 standard deviation down here. So your trade will be locking in your profits at this internal low, and then you can leave runners to your -4 standard deviation like this. You're basically looking at a 350-point move just from the runners. But if I'm going for base hits, then this internal low would be my target, and that's it. And once it gets hit, I'll just call it a day. But this is how I trade the 4-hour candle. I pretty much just look for these confirmations here. And once I have all of them checked out, I simply just take a trade. But this is very textbook for today. I mean, this is why I was looking for today on live stream. And yeah, it played out perfectly. I mean, more perfectly than I imagined. Uh, did you take any trades? I have not taken any trades today, simply because I was looking for the retest of this 5-minute change in the state of delivery. I mean, the same thing that went over here, right? The same thing I went over here is the same thing I was looking for, but from our hourly gap. So daily gap, we have this daily imbalance above right here, right? The time frame alignment for the daily is the hourly time frame. So when we scale down to our hourly time frame, you can see that we have this hourly gap right here. What's the time frame alignment for our hourly? It's the 5-minute. So when we scale down to the 5-minute time frame, you can see how this swing high was the one that pierced into the hourly. So let me make this visible on every time frame actually. Okay. So when we go to the 5-minute time frame right here, you can see that these two up close candles are the last ones that stung into this imbalance. So I was looking for the change in the state delivery closure and then the retest of it. So my trade was supposed to look something like this, right? With my stop loss at this high. And then my target, the lows. But simply, we never really retested that change in the state delivery. Neither did we retest into this 5-minute gap right here. So I have no trade right now. The framework for this was very perfect, but entry wasn't given to me. No opportunity entry was given to me. Because if I were to enter out the closure, then my stop loss would be way too wide. And it wouldn't be a really good risk to reward. But this played out really good. So the same framework here is the same framework I explained on the 1 minute. Let me go back to the 4-hour or the daily chart actually. Yep, like this. So yeah, that's why I didn't really take a trade today. Didn't get my entry provided. So, but the framework for this one on the 1 minute for the 4-hour candle was beautiful. Textbook perfect. Being in your community and watching your streams and analysis having like putting the last piece of the puzzle. Now I really need to figure out psychology and stop overtrading once and for all. Yeah, bro. I mean, once you know what to do, like once you come into the markets and you know what you have to look for, the only thing that's really gonna hold you back from here on out is yourself. So you really got to learn how to control yourself. You have to learn how to properly manage risk. How many consecutive losses can you handle before you start doubting yourself? Can you handle 5 losses in a row? Can you handle 4 losses in a row? So these are the type of questions that you have to really ask yourself, because trading isn't all about analysis and strategies. Because yes, you can have a good strategy, you can make money, right? But there's going to be times where you're just going to fall into a losing streak. So you got to start asking yourself questions of whether you're able to handle those losses. I mean, can you handle 5 consecutive losses in a row? If the answer is no, then you have to work on your psychology. You have to start going back and forth, looking over your trades, back testing to see how many losses in a row the higher probability is of having, and just really like asking yourself these deep questions within yourself, because trading is a solo sport. It's not a teamwork or anything. It's just you and the charts. So if you can handle yourself and you can be your own supporter, you're going to be fine. So once you have everything locked in, like you know what to look for, you have your strategy, your model, the only thing that you have to focus on really is controlling yourself. Like it's crazy, bro. Learning a lot of the change in state delivery, having more confirmation, simply taking a trade. Carlos, for your 2025 rest, you have live streaming every day, public accountability in it. Yeah. Yeah, I'm gonna be live streaming every day for this year. I mean, the reason why I wanted to live stream was simply because a lot of people were asking me to live stream, and also because it does keep you accountable. I mean, every day I'm sitting in front of these charts, I'm trading my personal account, like real money. It's not sim or funded. And I have people looking at me, everything I do. So it does definitely keep you accountable. I can say that for sure. But I'm gonna end the live stream now soon, because I already went over what I needed to go over. I mean, this was a very good framework. Daily gap, hourly gap, and then we had this 15-minute OB as well. So yeah, this is a very good framework. So I'm gonna end the live stream now. I'll see you guys tomorrow for the live stream as well. So I hope you guys have a good day. Hope you guys learned something from me today, and I'll see you guys tomorrow. Be safe, don't do dumb stuff, and yeah, just keep on getting 1% better, guys. All right, peace out, guys. Have a good day.